Right, we're on. Huh?
Uncle John told us.
Hey. Oh, hi everyone. We are live, I do believe. We should be live anyway. Are we recording there? We're recording there, right. Okay, I don't know if you all can hear me because I can't see anything with that light. But this is our third live Ask Us Anything on Facebook. I'm here with
Hello.
Oliver. Introduce yourself, Oliver.
Hi guys, I'm Ollie. I'm very pleased to join the TD team. It's an honour to be here with you, Stuart.
Honour to have you, my friend.
Thank you very
Honour
much.
to have you.
And looking forward to hopefully connecting with some of you over the coming years.
Absolutely. Okay. Those of you who want to get in touch with Oliver direct, he runs and heads up our Dubai office over in Business Bay.
Mm-hmm.
Yeah.
Yep, a little bit slightly better weather than what we've got today here.
I mean, we should be
good.
doing a weather report right now because it's absolutely awful out there. I was going to say something else, but it's awful. Okay, so should we go straight into it?
Yeah, let's crack on. Yeah.
What we like to do is we post out that we're going to do these live videos, Ask Us Anything, and we get quite a nice little response actually. So we've in no particular order, we're going to filter through. Myself and Ollie are going to filter through maybe one or two of the team. Hi team, say hi team. Hi guys. Maybe one or two of the team are going to jump in as well, and we'll filter through some of these questions and try and sort of answer your questions live on air. Any questions that you have that are coming up, we're monitoring the phones as well, so feel free to ask as we are online.
Mm-hmm.
Right?
Cool.
Right, should we hit it?
Yeah.
Straight away. First one, I'm going to read it verbatim. 24-year-old looking to invest in the first time, looking to invest for the first time in order to rent. I was looking for knowledge, tips, and experienced property developers and agents. As I am inexperienced, 24-year-old, currently saving to buy a property in order to let. However, after reading on this topic, I believe that renting out my first property could be quite difficult. Ollie, do you want to...
Yeah, I mean, first of all, 24 years old, looking for your first buy-to-let, brilliant. I think it's great. You know, if you think about the amount of time you're going to hold a property for, if you're buying it now, by the time you're 50, 60 years old, the value of that property would have multiplied many times over, and it'll give you a nice retirement pot. But I guess it really sort of stems back to, why do you want to invest in property? What's your goal? Is it that you want to have something for retirement? Is it that you want to supplement your income? And that then determines where you should be looking to invest. Also things to look at: who's going to manage your property as well. Are you going to manage it yourself? If so, do you need to learn a bit about the property market, about regulations, or are you going to use a management company? And if you're going to use a management company, who are they? What's their experience?
Absolutely.
And obviously, most importantly, the area that you're buying the property in, you need to make sure that there is a tenant demand. There's no point buying a nice property and there's nobody in the area who's going to live there.
Well, I think this is what is. This is what's the name of this person? Dilla is the name. So what the question that they're really asking is saying that they've read that it could be quite difficult to get your property let as soon as it's rented. So I mean, like Ollie said, it's all about demand. It's all about where you where you've investigated, where you've gone into to rent. If you're in big cities with an influx and a migration of new tenants, then you're going to be in a very good position to be able to get your property let quite quickly. If you are outskirts, rural, those kind of things, you don't have as big demand. You're not going to have as much footfall for your property. So keep it metro, keep it in the centre of any town or city where you are, and you'll do quite well, I think. Yeah,
absolutely. And also, it's not to say that you need to be in the major cities all the time. I think a lot of people think, I should only be investing in London, or only investing in Manchester, or only investing in Birmingham. There's great opportunities in those major cities, but there's also great opportunities in the smaller cities and smaller towns as well, outside of those areas. Because ultimately, people live in those areas, and all those people, they need somewhere nice to live. So if you've got a nice property in those cities or towns, you shouldn't have any major problems.
Absolutely, I agree. It seems, and I'll just go off the bat.
There's one more bit on there.
There is actually. So
deposit. Okay.
Also, would my deposit be higher due to me renting the property out? Right. Okay.
I guess.
How much LTV can?
Yeah. So I guess compared to, if you're buying as a first-time buyer, you might be able to put down sort of 5%. Yeah. But if you're buying a buy-to-let property, really you're looking about a 25% down payment. Sometimes you could get to 20. but realistically we'd say probably 25%. So you do need a little bit more, but your rental income should cover the mortgage, and long term it will certainly be worth it and be a good investment.
Absolutely. I mean, just go back to what I was saying. It seems like we're getting quite a lot of questions from young investors, from young people trying to get onto the property market and build a bit of a portfolio. We've got quite a few clients here that are under 25, under 24. We have one of our clients, 21, actually bought his first buy-to-let property, and they are, there's more and more. There's a sort of a burgeoning demand from the young population trying to get onto the property ladder, because, like Ollie said, if you get in young, you start early. That and hold long term, that is going to do extremely well for you over the course of you owning that property. I'm thinking, I'm talking to my colleague Francis actually earlier in the week, that it might be an idea to put together a young property club. We might put together some sort of round table event where guys at 25 or under, you got to show ID to get in. And you come in if you're interested in buy to let, if you're interested in investment, we'll do a specific event for you guys. So let us know if that's what you want us to do. That could be quite fun.
Sounds good. Yeah, excellent.
Right, Vinny, what was that? Vinny S 1030 has come to us and said, "Hi there. I think I'll go first. I have a 1-bedroom flat currently in South Oxfordshire." Which is giving me around 5% net return. Thinking about buying a similar one for buy to let. Some of my friends are going into holiday lets, and they're earning a lot more. And from a tax purpose, holiday lets seem to be quite attractive. What are your thoughts on what is involved, and is it hassle free? Not sure which way to go.
Yeah,
that's an interesting one.
Yeah, it's a good question. I mean, holiday lets can generate you a higher return because obviously you're charging a nightly rate rather than monthly rate. Yeah. But like Vinny mentioned, there is a lot more work involved. You might have people coming in and out, staying for 1 night, 2 nights, a week or whatever, and then you need to arrange somebody to let them in, somebody to let them out, cleaners, all of these things. So it's just weighing up the sort of why do you want another property? What's the goal, and what's your long-term goal as well? Is it that you're buying this other property to generate a certain level of income? If so, will the holiday rental model help you achieve that? If so, great. And then you just need the right team around you in order to manage the property, run the property, and obviously, like you said, yes, you can benefit from the tax incentives as well. So, I mean, there's pros and cons for it.
There definitely are pros and cons for it. We actually have an option that allows investors to get into the holiday let market. Yes, we do concentrate on buy-to-let opportunities, but we also have our holiday let option as well, which is really attractive. Yes, high yield, slightly different asset class, so there are different things to look out for. But again, we're happy to help you through and guide you through that process. Yeah. All right, let's move on. Thanks, Vinny.
Yep.
Appreciate that. Where are we now? We'll go to Mr. Apple 7.
All right. Hello, Mr. Apple 7. Okay. Releasing equity in current home to use as a deposit for a second home. Great idea. I love it. So we'll read it out. Okay. Hi all. We currently live in a property which, based on recent sales, is valued around 160 to 170k. We currently have 72k left on the mortgage.
Okay. So we're doing pretty well.
Which is good. Good. Do you want to write everything down? Yeah. How do we go about releasing some of the equity in this property to put towards a deposit on a second home? Our intention is to rent out our current property and use the money to buy a second home because we've outgrown it.
Right.
Possible rental income £850 to £900 a month. Okay, that's pretty good. So current property,
72k left on the mortgage, valued at
let's say 160.
Let's be conservative. Yeah. Valued at 160, 72k left on the mortgage.
So if you were to, I'd use 160k.
Yep.
And then refinance it on a 75% loan to value. So this is 75% of your property value. You can borrow as a new mortgage. You pay off your old mortgage, so you pay off your 72k. Right, so that gives you 120k new mortgage. You pay off your 72k, and you're left with 48,000. So you can use that 48,000 as a down payment.
As a down payment on another property. 48,000 is definitely going to get you a really nice 1 or 2 bedroom apartment in any of these areas that we've mentioned to you before. So it's a really good start to sort of instantly double your portfolio from one unit that is, that you currently live in, to 2 units and something that's going to generate some income for you.
Yeah, and even if a second home was used, you were going to use that for you to live in. Yeah. You've essentially got 50k as a down payment. Great. Opens you up to a lot of good areas, and obviously the rental income you're going to generate from your first property after the mortgage is being paid. You're going to have a few hundred pounds in your pocket every month as well, which you can either use to pay towards your mortgage on your next home that you're living in. So essentially, you're potentially living for free, depending on your mortgage.
That sounds good,
which is
especially
nice.
living in London town.
Getting your passive income to pay your mortgage, great. You're almost financially free. Or you can use the money to reinvest it into more properties or other asset classes or whatever, and just scale the portfolio.
Exponentially scale your portfolio over a period of time. Great question. Thank you very much for that, Mr. Apple 7. Appreciate that. Right, should we go with this one here? Alex Waitforanda from Instagram.
Hi, Alex.
I have a flat that's worth £120,000, which I have inherited. It's almost fully paid off. Congratulations. Great. That's pretty super. What would be the next best step for using that flat to build my portfolio? How can I release equity in the flat and reinvest it in apartments? And what is an interest-only loan? There's a couple of questions there. The first question I think we actually covered slightly earlier, but it seems to be the general consensus. A lot of people want to know, how can you release equity? How can you pull out funds from your current property and put it into a second home? You've got here 120k on a value of a property. The mortgage is almost fully paid off. Exactly the same equation as what Oliver just went through in getting a 75%, remortgaging at 75%, pull out then the difference, pay off what's left, and then you use that to buy the next property. And in this case, if you're pulling out anywhere, if you've got a very little to pay off.
Yeah, let's say you pulled out 75% of 120, it was about £90,000. Yeah. You could use that for 2-3 properties in the right areas.
If you bought well and you're quite diligent with what you were looking for, you'd be able to expand the portfolio quite quickly there.
Yeah.
I think that's a great strategy, and you do extremely well off of that.
One thing I say about the current property you've got, it'd be good to weigh up and find out what the rental income is that it's going to achieve as well. If the rental income is or it's not a very desirable area for tenants, weigh up these things, because it might be better to sell that property and then use the money and the profits that you make to put into, if you've got 120k rather than 90k, put that into 3 or 4 properties, and then in the right areas. So I'd say do a bit of research on that first. Speak to a few local letting agents, find out what the demand is, what sort of rental returns you can expect, and then you can decide which way to go with that place. And then, like Stuart said, you can refinance. Best thing to do for that is speak to a mortgage broker. They've got access to, some lenders, some brokers have got access to, hundreds of different lenders to ensure you get the best rates, rather than just going to, HSBC or NatWest and just being offered 1 or 2 rates. Go speak to these guys, get the best rate, get the best loan to value, and obviously it will ensure you can maximise your return on investment as well.
Alex has also asked that at the end there, what is an interest-only loan? Oh, phone's ringing. Obviously, we are live, so there you go. People ring us, So. It's for me.
It's your fans.
Not available, I'm afraid. I'm live.
CNN, they want to hire you.
So it's CNN on the phone right now. Bloomberg. Can't take the call. I'm busy. Facebook Live. Okay, and what is an interest-only loan? Let's.
It's exactly what it says.
Yeah. Basically.
You only pay the interest on the loan. A lot of people say, why would you do that? What happens at the end? You've got this big loan to pay off. I guess the reality is, with a buy-to-let property, the aim is to generate income.
Cash flow.
Yeah. So by you putting more of your cash into the property, it doesn't give you a better return on your investment. Yes, you'll generate more in your pocket, but you're putting more back in. Mm-hmm. So actually, when the value of the property goes from there to there, whether you put in that or whether you put in that, you're better off putting in less, because more of the growth is yours.
Yep. You just get to see more of it in your pocket, basically. It's all about cash flow, this game, I think. And if you've got a mortgage that is a full repayment, you're paying off the interest as well as chipping away at the capital, which you don't necessarily need to do. You know, it's not a practice that absolutely everybody takes. Most investors do look at this as an interest-only, strategy. But having spoken to one or two of my mortgage brokers this last week, even the guys over at MFS were suggesting, actually, our main contact there was suggesting that he actually has a lot of his buy-to-lets on full repayments. He's got a couple that are on interest only and a couple that are on full repayments. Just based on where they are, on how he wants to manage them within his portfolio. So you've got to look at what works for you and what is right for you. But me as an investor, everything I do is all about cash flow. I'd like to maximize the amount of return that I'm getting, and therefore use it and employ it elsewhere. So therefore I try to go for interest only as much as I can.
You're then able to, your passive income that you're generating, you can get it working for
you again quicker.
Rather than just keep putting it more and more into the property.
What's up, Johnny?
Get it working.
Guys, sorry to interject there. We're struggling with live today, aren't we? One of our clients has actually reached out to. He's referred to you as your nickname, Stuart, which I won't reveal to the big,
oh goodness me,
the big wide world.
Oh gosh,
but he's asking, and this is something that comes up
only a very good
incredibly
friend,
frequently. It's all complimentary, I'm sure. Do you feel there is any big difference between a 999-year leasehold and a 250-year leasehold versus freehold if buying as an investment?
That's a really good question. Go on.
I
would say in my experience and my understanding, absolutely not. If you've got a 250-year leasehold, you don't really need anything more than that, unless my friends, I don't know which one of our clients this is, unless you're working on a cure that's going to let us live a lot longer than we think. I mean, it's not really something we need to worry about. The only difference with freehold and leasehold is when you're working with a leasehold that's under around 85 years, that's when mortgage brokers and mortgage lenders decide to actually, we're not going to lend on it, or you might find it harder to get a mortgage. So if you've got a mortgage, or if you've got a property that has a 99-year lease, for example, as it ticks away down, years down, a decade goes by, and you're at 89 years, you might then find it difficult to find a new buyer who's going to be able to finance it. Because a lot of lenders will say, actually, we don't like the look of that. However, a lot of new build property, a lot of the options that we work on have a much higher lease
250
lease term. 250. We've even worked on 888, didn't we?
Random.
That was a good one. But it's we call those generation leaseholds. It's something you'll never have to worry about within our lifetimes, and even in the next. So it's I wouldn't say that you need to make much. There's not a huge amount of difference between 250 and 999. Unless you're working on a cure.
On a rather morbid note.
Oh gosh, here we go.
Are you
sure this isn't you, John?
No, it's not me.
I just had one thing
Sorry,
as well. Obviously, I think one of the points was about freehold as well. I think a lot of people, especially in the region that our office is in Dubai, a lot of people only want to buy freehold. And I think part of that is because of maybe not fully understanding the benefits of buying a leasehold property. Obviously, if you're buying a freehold property, if anything happens to it, any maintenance needs to take place, you're responsible. You've got to sort it out. If the roof leaks, that's your job. Leasehold was introduced a number of years ago in the UK and a number of other countries to essentially protect all of the owners in the building. You have a central management company, they're responsible to take care of everything. The freeholder is also responsible to look after everything as well. And for you as a landlord, or you as an owner in a building that's leasehold, you can sort of relax a bit more in the knowledge that there's somebody else taking care of the lifts, the cleaning of the communal areas, the lights in the stairwell, the roof. Somebody falls over as they walk in the main entrance, they're not going to sue you. So it sort of gives you that peace. It should give you that peace of mind that somebody else is there to help.
Kind of limits your liability,
massively,
doesn't it?
Massively, yeah. And it's in terms of ownership, it's very little difference. Yes, obviously there's an owner of a freehold, but when you've got a 250-year leasehold title, like Stu said,
you're not going to outlive
You're
it.
not going to outlive it.
No matter who you are, I'm afraid.
And you can even extend it as well. So
Yes,
even
yeah,
that
you can.
example, it gets to 80 years, you
Yeah.
can then extend it and renew it. Take it back to another 250 years or something like that. So I wouldn't. It's not something I'd worry about.
Brilliant. Thanks for that.
So the other part of this question was
Okay.
referencing exactly that. So when it comes to the end of one's life,
Yeah.
in terms of passing on title of, or passing on the asset to somebody else, does that need to be kind of considered within the will as such, or is it just like a straightforward sort of?
Yeah, absolutely. Would be, yeah. I mean, anybody making any investments, you should always have a will. I'd probably recommend seeking advice from a lawyer.
Yeah.
It's not something we get involved in, but definitely get a will sorted to make sure there's no issues when you're passing.
Yes, for your estate. But when you're buying through us, or when you're even getting advice through us, we will always put you in contact with the lawyers that we use, the lawyers that we recommend, independent lawyers that are extremely efficient, know the market extremely well, and obviously covered by the Law Society and backed and
I think that's the thing you get. Buying property and investing in the UK, we've got such an old, solid legal system in place. Dates
some of the
back
oldest property law in the world,
hundreds.
basically.
Yeah, I mean, land registry data goes back, over 100 years. So when you compare it to a lot of these other countries that are still up and coming, I think the UK is always considered as a safe bet for one of because of that reason.
Great. Okay. Well, I'll tell you what. We've run quite well. We've covered that. Excellent.
Yeah.
Well, I'll tell you what we'll do then is introduce Oliver, who runs our Dubai team over in Business Bay in Dubai. So feel free, if you are over in the GCC region, come in, go and see the boys over there. Yeah. They'll take good care of you. We're all working from the same pot, so everybody knows exactly what we're working on. We're happy to continue taking questions. We'll do another one of these sessions, as was that okay?
Yeah.
Oh, that's okay. Okay, we'll do one of these sessions. We try and make it as regular as possible, but at least once a month. But we also do in-house events here in our London office, in our Mayfair office. The next one is next week, isn't it, John?
Yeah.
What's the date?
I think it's next Thursday,
27th
from 6:30 onwards.
Yeah, we're just going to have a nice investor roundtable with some tea and some Tunnocks tea cakes. There are other good snacks, but those are just some of my favourites. And we're going to sit around, we're going to discuss strategy, we're going to discuss expanding on your portfolios, and we're going to discuss the ways that we do it and the projects that we have available. But please do come and join us. You're more than welcome. We'll do a live then as well, so Jemima, you can jump on that live. So you can jump in there if you can't get into London. But look, thanks for your questions.
Yeah, thank you very much. Thanks for having me.
Well, great to have you back in town. Yeah, I was looking forward to it. Could do with it after all of this. But thanks again. Thanks for tuning in, guys.
Cheers.
Take care.
Bye.